Hello everyone and welcome back to Southern Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that like and subscribe. It greatly helps the channel, so thank you very much for your support. Now, today I'm not so much concerned about the markets. I think they'll probably trade, sideways with a bit of volatility until Wednesday. So Wednesday is a big day because you have CPI coming out and you have the Fed meeting. So basically, with a strong job report on Friday, everybody is now pricing in that the rate cuts will happen later, or maybe the Fed will be more hawkish than expected, meaning, either suggesting that rate cuts won't happen or will happen at a later stage or blah blah blah. I think what's going to happen is on Wednesday, I think CPI will come better than expected, and I think that the Fed, and even if it doesn't come better than expected, the Fed will still talk about cutting interest rates. You see, the UK already cut rates, Canada cut rates last week, the ECB cut rates last week, China cut rates last year. The US is pretty much the last one of the big markets. Of course, maybe you find Switzerland without cutting rates, but it's a small market, has very little relevance in the world. And I think what's happening, and by the way, I've said this before, I predicted months in advance that it doesn't matter what the inflation numbers say, the ECB and all the others will cut rates because there's a debt problem and you cannot withstand interest rates longer for a long period of time. Now, you can do it in the short term. So when people are saying, oh, the stock market can only go up, if interest rates are low, I said, BS. Depends if money supply is being created by the Treasury Department. I was the only YouTuber talking about it. Everybody was talking about the next Great Depression and the next this and next the other because that was what was on the news. So no, you can have new all-time highs with high interest rates. You just need the government. So if the Fed stop buying treasuries, you just need the government to create money by spending money like a drunken sailor, which is exactly what they've done. But the point is, you can do it for a period of time until the refinancing kicks in. Because once you need to refinance all these major debts at high interest rates, then it becomes a math problem in which basically you're allocating huge portions of your tax revenue just to pay interest on the debt, which obviously is not going to happen. So the Fed will come up with an excuse. Last CPI, what did they do? Coffee was hot, take it out of the calculation. And they will keep on doing this kind of stuff until the numbers are what they want. And if for any reason they cannot have the numbers they want, they will say that 3 or 4% inflation is actually a better target in the new modern economy. So understand it. They may not cut rates. I think they'll probably cut rates because these central banks, they all, talk about these things at the same time. You need to understand this. Like the Fed knew that ECB was going to cut rates and the Central Bank of Canada was going to cut rates and the UK was going to. They know each other. They talk to each other every single week. They know very well what each of them was going to do. So I think that the CPI numbers probably come softer. Probably we have the first cut this week, and that may be the trigger that will kickstart the next stage of the bull market in crypto. You see, Bitcoin has been condensed between pretty much 69 and 71,000 for weeks now. You need to imagine it as a boiling pan, So it's boiling, and the more it gets there, the more pressure it accumulates. So when it pops aggressively. I said this before, I think we're going to have negative rates in the US before the end of the decade, the negative Fed funds rate. And I've said this before as well, I wouldn't be surprised if Trump would suggest that the US, maybe in the future, should hold Bitcoin together with gold in terms of reserves. That would be the excellent top signal. I'm not saying that that's going to happen by, as soon as he gets there, but I wouldn't be surprised if that could be a situation in the future and would catch everyone off guard, and it would be a perfect top signal. Now, and Peter Schiff would probably, have a heart attack if that happened. Now, what I think is going to happen Wednesday is things will look better. And even if they don't cut rates, or even if CPI gets a bit, worse, I get the feeling that during the Fed's meeting, they will be extremely dovish. That's my view. And basically, they will guarantee rate cuts in the future. I do believe that actually the first rate cut will be this week. I'm probably actually the only one predicting this now. And I am very convinced that that can be the case, because now the mood is all, there you go, we need to wait another month, wait for things to collapse, blah, blah. The things are already bad. The majority of the jobs created were part-time jobs, full-time jobs were lost, unemployment rose, which means the people getting the new jobs, the part-time jobs, are people who already have jobs and they cannot basically survive on one single salary, so they need two. And that's how you can have the job market growing and the unemployment growing at the same time. And the idea of the strong job market's growth is very simple. Is to basically pretend that Biden's economy is extremely strong and all these jobs are being created and it's amazing and all of these things. At the same time, you don't want inflation high. So I wouldn't be surprised if you have this situation where job reports come always hotter than expected, but inflation also moderates better than expected, because the idea is to create the narrative that Bidenomics is working at full steam. Obviously, you guys follow this channel, so you know better that these, number one, these job reports are all a joke. But very important, it is not what I think. You see what I mean? Like what I know, and I know that the job report is extremely weak, but I know that the market is going to react a certain way. You see, that's the key. It's not what I know, it's what I think the other people will react, because because if all position on one side and I'm right, it doesn't matter. See what I mean? This is the mistake that people like Peter Schiff make, which is they don't understand how people will react to certain things. So they think what it should be happening instead of what is happening, which is very important, the distinction. Now, the idea is to make Biden look good, but you see, it's a case of the emperor clothes, because the media keeps telling you, oh, job market is too strong. Oh, they cannot cut rates because the economy is too strong. Oh, blah, blah, blah. And then you see, okay, Biden has the lowest approval rating and Kamala Harris have the lowest approval rating, both their combination, of any president in history post-war. And then you see, okay, why do they have the lowest approval? By the way, this includes Jimmy Carter and the Vietnam War and all that garbage, right? Where do they rank the lowest? Like, where are they the worst? Oh, they are the least popular because of the economy. But wait a minute, CNBC is telling me, and Bloomberg and all of these channels are telling me that the economy is great. Yeah, but that's the narrative. So narrative, economy is great, job market, Bidenomics, the economy is too strong to cut rates, blah, blah. So this is the story, the fact. Biden and Kamala Harris have the lowest approval rating in American history, and they rank the lowest in the economy. Fact, narrative. You need to understand and distinguish both. They are here trying to portray something, okay? Now, all of this is bullish for risk on assets. People forget that during the bull market, you have consolidation periods, you have softening periods, you even have 30 and 40% corrections, which we haven't had yet. So people forget. This is amazing. I've never seen sentiment so bad in crypto with the prices so high. It's very incredible. But this is the type of things that people hate the most in crypto, which is, if it's going up, this is their favorite part. But if they need to choose between moving sideways, going nowhere, and like watching paint dry, they would prefer going down rather than that, rather than the sideways movement. They fail to understand that you need to build up the energy to explode higher. And also, you don't want to explode everything at once, because then you have the risk of dealing with a shorter cycle than expected. So embrace it, understand it, and you'll be fine. And with that, guys, pay attention. Wednesday is going to be a big day. Thank you very much for your support, and I'll catch you in the next one.